Welcome back. Our next guest is a strategist, and lately he's been taking a close look at his forecast and the forecasts of other leading agencies on global economic growth and what it means to stock markets and investors in 2025. Jeffrey Kleintop is Chief Global Investment Strategist at Charles Schwab, and he joins us now. Jeffrey, thanks a lot for joining us. What is your take on global economic growth in 2025?
I have a brighter outlook for 2025 than in 2024. Yes, the U.S. and the Chinese economies may be slowing a bit in 2025, but nearly every other developed market economy outside the U.S. are likely to see better growth. Remember, many of them experienced rolling recessions over the last 6 quarters. In fact, none of the top 45 economies in the world are expected to be in recession next year, and 3/4 of them are likely to grow faster. That includes Canada. And better economic growth can lift earnings growth on easy comparisons to a year ago. In fact, in the just reported Q3 earnings season, we saw European companies outpace with their earnings, outpace the S&P 500 for the first time in about 6 quarters. So if you combine better earnings growth with rising valuations on a brighter growth outlook and rate cuts in most of the world, that can mean better returns for international stocks, perhaps double-digit returns, much better than what we saw here in 2024.
And what do you see in stock markets? Do you see valuations stretched at this point?
In the U.S., there is some risk of high valuations and slowing growth, but outside the U.S., valuations are mainly below their 10-year average. So I could see some expansion there. You know, one of the things I think that's interesting is post-election, we've seen U.S. stocks really lead the rest of the world, including U.S. small cap stocks, which have done really well. There's sort of this America First idea that's really going to benefit U.S. small caps, and that's exactly what happened after Trump won in 2016 from election day to the end of the year, but it completely reversed in 2017. I think that's a signal for 2025. The first full year of Trump's term saw, despite tariffs and uncertainty of the new administration, we saw emerging market stocks rise nearly 40% in 2017, followed by the outperformance of international stocks, with U.S. small caps the worst performers. And I think that happened because we saw better global growth in 2017 that lifted more economically sensitive companies, echoing our outlook for 2025.
That is somewhat counter to the narrative that we hear in a lot of quarters these days, that small caps in the U.S. Will do better on declining interest rates, which benefit them more so than large cap companies, many people believe, and on a rotation out of the big mega cap stocks. Do you challenge that narrative?
Well, I would say that interest rate cuts would be positive. I don't know how many we're going to actually get. The Fed is now waffling a little bit in terms of how many. I think there was the expectation of maybe 5 rate cuts from the Fed just a few months ago. That's really trimmed at maybe 2, 3. I think you'll see far more outside the U.S. than inside. You've also got this risk of a lot of the small cap universe isn't very profitable. And I think you're going to see a rotation into more quality stocks, companies that really produce better cash flow growth than some of these small caps. And then the threat of a trade war does weigh more heavily on small caps that are really more dependent on imports than larger cap companies. So I think those may weigh on small cap performance. They may perform well, but I think they may not lead the way investors are expecting here in the rally since the election.
How likely or how possible is a flare-up in inflation that would actually halt the rate cutting cycle that major central banks are on, and perhaps put them in the position of combating inflation again? As you note in your review of the global scene, Brazil has experienced exactly that scenario. Inflation has kicked up again, and it's now raising rates.
Yeah, that's a great point. You know, the market seems highly confident in rate cuts by major central banks throughout the first half of 2025. Brazil's interesting because over the last few years, Brazil's been a leading indicator of what other central banks are going to do. They were the first to hike back in 2021, about a year ahead of the Fed, and the first to cut in 2023, also about a year ahead of the Fed. And recently, they've started a hike again as inflation's picked back up. Across most major economies, we've seen in the latest readings, inflation begin to pick back up again. And there are some leading indicators pointing to inflation rising, notably the input price component of the PMI index, something I watch very closely. When companies are paying more for their materials, they generally pass that on about 6 months later to their customers. And that's pointing to maybe some stability or even higher inflation, notably in the US as we look out over the next 6 months. So that is one of the biggest concerns I have. In fact, that might even outweigh tariffs as a concern for 2025.
Jeffrey.